we're a bank financial team who is considering this loan for today. You've applied for a home loan today, and we'd like to consider the defining characteristics. The first being that you're a recent college graduate, which means great things for your future. The second is that you have a currently stable job at $40,000 a year, and there's high likelihood that with your current degree, or with your new degree, you're going to see a change in position in the future, meaning more cash flow. And finally, we have to look at the fact that you've applied for a mortgage on a house at a valuation of $165,000, but you've been denied, unfortunately, and we want you to understand why.
The things that they look for, mainly when you're applying for a loan, there are 4 things that we look for. The first thing being credit history. Now, because you've just graduated from a 4-year education, you're probably going to have some educational debt in store. And we understand that you're a very responsible person, but that doesn't mean that your debt is not going to go away entirely. The next thing that we look for is your cash flow. Now, under your current job, you will maintain a steady income of $40,000 a year, meaning a little less than $100 a month, pardon me. However, we as a bank do not allow our customers to spend over 28% on housing per year, and we also ask them to offer a 20% down payment currently. The next thing that we look for when you apply for a loan is collateral. Now, unfortunately, you have not mentioned any collateral to us, and because you have just gotten out of college, you have not yet had an opportunity to purchase any land or a house, and therefore we do not see any collateral on your resume. And the last thing we look for is character. You have been part of our bank for the last 5 years, and we really respect your business and your excellent financial decisions. And you have just recently graduated from college, and you are a department manager at your store. However, this does not outweigh all of our other policies that we look for, and unfortunately you do not meet our current standards for a few reasons.
So we just want to make sure that you directly understand why it is that after these 4 successful years of business together, you're not actually going to be accepted on this loan. Like my partner talked about, credit history, it's very important, and you have been with us for 4 years, but 4 of those years were in the education system, and you're currently out on your feet for the first year of being employed without being in education. So we need a bit of a more substantial amount of time to bring that into account and make that an advantage for you. Secondly is cash flow. We require 20% down payment on our mortgage applications. Unfortunately, you did not meet that 20% standard. You only have $10,000 of the would-be required $33,000. So less than a third of that down payment. No matter how much we like it, we unfortunately can't accept that loan application. Additionally, your salary of $40,000 a year is good, but unfortunately it also does not meet the standard of 28% of that income being spent on your mortgage. So if we did accept you, you would be paying entirely too much of your income on that mortgage, so we just want to do you a favor and not have to put that on your bill. And then next is the collateral. You are getting out of college, you don't really have a house of your own, obviously. You don't, as listed, have a car yet, so if in case this mortgage did fall through because of anything bad happening, we wouldn't have a way to get our money back in any sense. So it's unfortunately going to be another reason why we can't accept that loan. And then lastly is the character. Yes, we have been excellent partners for the past 4 years, but unfortunately we haven't had a substantial amount of time to make sure that it's very stable. So because those standards were not met, it's not a personal thing, but we're going to have to deny that loan, and that's why.
We do have to deny you today, but that does not mean that we're going to have to deny you in the future, and there are a few strategies that we hope you consider and approach in the future. The first being maintaining healthy credit, specifically by paying off educational loans, especially that's going to be helpful with your degree, helping pay off those. Secondly, steering away from credit cards except when necessary. Further, houses are absolutely a good investment, but unless you're in the best possible situation for success, we hope you recognize that this may not be your best option right now. Further, the likelihood of switching positions means that there's going to be more cash flow, but also that transition may be difficult for a short period of time. It's very important that we do not see a switch in banks because you're in a good position here. We have the tools to help you, but you have to just change a few things so you put yourself in the best situation for success.
And because you're not going to be accepted on this loan, I offered up a possible financial plan of what to do with that money that you did accrue to make that mortgage. You're going to split 25% of that money that would have been invested into the mortgage should go to conservative investments like treasury bills or sovereign bonds of some sort to make sure that you have a stable source of income coming through. And then 50% of that money should be used as a moderate investment fund, index funds, the S&P, the Dow, the NASDAQ. If not that, then possibly a dividend fund where you get into big blue chips and just get your monthly payments right there. And then 25% will be aggressive into more innovative hedge funds and or mutual funds that could find some global profit profits that wouldn't necessarily be seen unless you use your money for that.
And furthermore, we are not denying your character in any way or your potential to acquire this mortgage in the future. We are just simply saying that due to the somewhat recent financial crash, both the banks and the customers of these banks are looking to maintain the most financial position possible. And unfortunately, due to that today, we are not able to offer you this mortgage loan.
Do you know any other possibilities out there, like maybe private mortgage insurance or first-time home buyers, incentive banks or federal subsidies or anything like that that I might be able to access, or do you think that I just don't have enough income to support those?
Well, unfortunately, you wouldn't meet the criteria to apply for any of the poverty programs for the impoverished or those who really don't have enough money to offer any sort of plan up. What it seems like would be the best opportunity is to just sit on your salary, sit on your education, continue to grow that capital in the next 3 to 4 years, come back to us for the same mortgage plan that you want now.
Because we have been a customer with you for the last 5 years, we are going to offer you better rates than many other new banks would offer you. Additionally, since you have just graduated from college, you're most likely going to obtain a much better job in the near future, and we look to see the collateral and the cash flow that you will achieve from that.
So one of the things I'm a little confused on is a couple years ago, I know people who got a loan for the same amount, lower, same interest rate, lower things, put less of a down payment on. Why it feels like I'm being penalized now as opposed to those individuals?
Well, what it really looks like is that the entire financial economy was penalized for that behavior. You would be writing down an income that wasn't actually certified. You could put down collateral that wasn't actually back-checked. But that's what led to the financial crash happening in the real estate housing bubble being popped. So currently the standards are going to be a little bit more tough than they used to be. We're going to have a little bit higher requirements, but that is hopefully so that we won't have to have a reoccurrence of that crash.
All these changes are in your best interest, not just the banks. We're trying to benefit you, so you have the best possibility for the future. Thank you.
Thank you very much.
Thank you.